Hey everyone, welcome back to Corporate Decoder, where we help you see through the smoke and mirrors of corporate reports. Today we're diving into a filing that has got some interesting moves being made, an update that suggests a company is playing a high-stakes game of chess. This is DIH Holding US Inc, a company that is making some intriguing adjustments. Before we dive in, if you like getting clear, no-nonsense explanations of these financial documents, hit that subscribe button and ring the bell. We also have a fantastic community over on Discord, link in the description, where we break down this stuff even further. So what is going on here? DIH Holding US Inc has entered into a new agreement to sell shares, and it looks like it is tied to some upcoming regulatory hurdles. This filing is all about a common shares purchase agreement. Think of it as a deal where the company agrees to sell a certain number of its shares to an investor. Now, this isn't your typical stock sale. It is a private deal, meaning it is not being offered to everyone on the stock market. The company DIH Holding US Inc is agreeing to sell up to a massive amount of its class a common stock. We're talking about almost 10.5 million shares, or about 20% of their voting power. That is a significant chunk. They're doing this under a special exemption in the law that allows for private sales of stock, bypassing the usual lengthy registration process with the Securities and Exchange Commission. The catch is that these shares can't be easily bought or sold in the US unless they're properly registered or an exemption applies. Here is where it gets really interesting as a sort of down payment or commitment fee for this deal. DIH Holding US Inc is giving the investor 100,000 shares right away, plus a warrant that lets them buy another 100,000 shares. But there is a massive condition here. These extra shares and the warrant are like a revolving door. They get returned to the company if a specific appeal to the Nasdaq hearings panel doesn't go their way. This strongly signals that the company is facing some kind of issue or potential delisting from the Nasdaq stock market, and this private placement is a crucial part of their strategy to navigate that challenge. It is like they're saying, we'll give you these goodies now, but if our big appeal fails, you give them back. Beyond that initial commitment, the deal also has a clause for future purchases at a discounted price. The company can tell the investor to buy more shares, and the price will be 94% of the lowest trading price over the previous 3 days. This means the investor is getting a favorable price, especially if the stock price is volatile. It's a way to secure funding, but with a built-in discount that makes it attractive for the investor, while also giving the company flexibility. So what is the money for? DIH Holding US Inc plans to use the cash they get from selling these shares for working capital and general corporate needs. That is pretty standard language. It doesn't point to a specific new project, but rather a general need for funds, which again connects back to the potential need for a financial cushion during this Nasdaq appeal process. They're also promising to file a registration statement with the CC to cover the resale of these shares within 45 days. This is important because it shows their intention to eventually make these shares available for public trading, but it will take time. The entire agreement has a long tail, terminating 3 years after that registration statement becomes effective. Now, let's look at the bigger picture. This filing isn't about a new product launch or record profits. It is about navigating a potential crisis. The fact that the sale of securities, including a commitment fee, is contingent on the outcome of a Nasdaq appeal tells us that DIH Holding US Inc is likely facing serious scrutiny from the stock exchange. This could be due to financial performance issues, compliance problems, or other factors that put their listing status at risk. This private placement is a lifeline, a way to bring in cash and potentially satisfy certain requirements that might help them stay listed. What are the implications here? Well, for investors, this signals a period of heightened risk and uncertainty. If the Nasdaq appeal fails, the company's stock could be delisted. This would make it much harder for investors to trade their shares and could significantly devalue the stock. However, if they manage to win the appeal and still have the funds from this placement, they could emerge stronger, having shored up their finances and maintained their listing. On the face of it, DIH Holding US Inc is showing a proactive approach to a tough situation. They're securing funds and setting up a structure that, while conditional, provides a potential path forward. The risks are clear. The appeal could fail, leaving them with fewer options. The opportunity is also clear. Successfully navigating this challenge could stabilize the company and allow them to focus on growth. So, what is my take on this? DIH Holding US Inc is in a precarious position, attempting to use a private capital raise as a tool to navigate a critical regulatory challenge. The reliance on the Nasdaq appeal outcome for the retention of the commitment shares is a bold move, highlighting the urgency of their situation. While the company is taking steps to secure funding, the success of this strategy hinges entirely on that appeal. It is a classic case of a company fighting for its listing status, and this filing is a key piece of that defense. Alright, that is our breakdown of this interesting filing. What is your take on these numbers and what they signal for the company's future? Are they making a smart move, or is this a sign of deeper trouble? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives like this. And don't forget to check out our Discord community in the description where we discuss these things in even more detail. Thanks for watching, and we'll see you next time on Corporate Decoder.